You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time to rock out with the Option Block, your bi-weekly source for all things options related. My name is Mark Longo. I shall be your host for this 1 hour journey through the world of options. A lot of fun stuff to get to. Of course, if you guys like what you hear, as always, leave those reviews wherever you get this show. Could be in any of the iTunes, Google Play, could be in the app stores for those various things. If you listen to our apps, wherever you listen to the show, leave those reviews so other folks can continue to discover and indeed enjoy the program. And of course, if you have a question, it's Thursday, it's mail block time. Hit us up. You know where to find us at Options, most of the major social media platforms. TheOptionsinsider.com also works. Or if you listen to live, you can put them in there as well. We bump you guys up to the top of the list. We like you guys just a little bit better, just a wee bit better. I'm just kidding. We like you all the same. All right. Let's see who you like the same. Let's see. First off, let's see who's joining me on the old all-star panel today. Let's go out to the quiet, the sleepy, the tranquil hamlet known as St. Charles. We were joined once again, thank goodness Comcast has finally gotten their act together via the magic of internet by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Comcast hasn't quite got their act together yet, but they have it together enough for the show. So we're doing okay, and hopefully by next week they'll totally have their act together. I'm learning all sorts of things about internet wires and how they work. So yeah, a lot going on. But I'm here.
Not things you ever really want to learn about, because when you do, it's kind of like being an offensive lineman in your old world, Uncle Mike. When people heard your number called, it usually was a bad thing. It usually was for a penalty. So same thing, when you have to learn in-depth knowledge about your internet connections and routing and all that good stuff, usually it means something bad is afoot over there. And also joining us from a land that technology forgot, a.k.a. Maine, where somehow he is joining us. He is the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program, to you as well.
It is a pleasure to be here on the technology that I do have available right now.
Yes, which is, of course, a couple of tin cans and some string. Somehow you got that string to run all the way to Chicago, and it sounds pretty good. So let's roll with it as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is going on today on our screens, what is lighting up your tape. Kind of another weird end to another weird week as we're coming into the start of the show here. The markets are kind of mixed. I guess it depends, once again, where you are looking, how mixed it is out there, because we're seeing most of the major indices, like the Dow, flittering with literally unched up a little bit, down a little bit. It's effectively, as I'm looking at it, just ticked up 0.01%. 0.5% right now. We're seeing the S&P similar territory, 0.02, so both of them effectively unched on the day. We got NASDAQ, though, feeling a little bit of love because it's another day that ends in Y. Why shouldn't tech be up? Up 0.5% today. We've got gold and crude both taking a bit of a break. Gold shy of that 2,000 level, again, 19.5 or so. And crude oil, WTI, at least at about a little bit shy of 42.5. If you want more of that, stay tuned for TWIFO in a little over an hour, about an hour and a half. We'll get into all that fun stuff, gold, vol, energy, vol, FX, rates. You never know where the heck we're going to land on that show, so stay tuned for that. And, of course, all things small cap, feeling a little bit of dark side. So it is a nice little spectrum on the day today. Small caps off about 0.5%, while NASDAQ's feeling the upside over there, up 0.5%. Coming into Showtime, we saw our old friend VIX Cash hovering right around at 23. That puts it up a little over a point, about 1.25 points from our last show, which kind of reflects yesterday's sell-off and today's kind of mixed malaise, for lack of a better term, out there, as a lot of things are kind of holding and hanging over the market out there. Continued economic woes, continued concerns about the coronavirus. The conventions this week didn't seem to really lift the markets overall. Of course, in general, it doesn't seem like the Dem conventions ever really correlate with strong rallies in the markets, but c'est la vie. We've had this discussion before about don't get too political with your markets because we all know at the end of the day, they mostly go up. Let's see. VVIX coming into Showtime at about 115.5, up about 4 handles. VXX, our old friend that likes to usually erode pretty much endlessly, these days getting a little bit back, getting back a little over 1/3 of a point up to about a little bit north of 25. It was about 25 and change coming into Showtime. So that's our table. The places are set. The pieces are moving. Let's see what's lighting up our collective tape. So let's go around the horn the way we came. Let's start in the land of Uncle Mike. Sir, what is lighting up your tape on this? I guess unless you're hanging out in NASDAQ, not really an Uncle Mike type of day, sir.
Every day is an Uncle Mike type of day. You mentioned the convention. We did actually, the futures, and I like watching the futures at night when we have events going on like the convention. So apparently the market did not like the speech at the time last night because of the fact that it went down at night, or the S&P futures did. However, they've recovered quite nicely this morning. So we're back to even right now. Just in looking at the overnight, which to give you an idea of it, we were in the 334s on SPY overnight, which you can trade SPY 24 hours now, in case any of our listeners didn't know that. But once the market opened right at 8:30, we have just, if you look at a chart from 8:30 Chicago time until now, we have just been going pretty much straight up, and we've kind of been leveling off a little bit the last hour and a half or so. But for the most part, buyers definitely came in the morning. That's for sure. So that's something that I'm watching right now. Tech, of course, lighting up the tape as well. Apple up almost $6 on the day. I think it's almost just a matter of time till it goes to 500. But we'll see. I could be wrong by all means. So we have that. Also, silver continues to hold its gains. It's not quite at its high for the year like it was, but it has held on to a lot of gains throughout the rally with which it's had. So that's another unique thing. With the money printing that we have going on, you live in a unique time when no longer are Democrats and the Republicans debating over, we want to put out a stimulus package. No, we're not. That's not the debate anymore. Now the debate is, we want to put out $2 trillion. Oh, no, we only want to put out $1 trillion. And that's what the debate's over. So it's kind of a unique time that we're in right now, and that it's not about how much, what the overall philosophies are of each party. It's just who wants to do more, who wants to do less. It's just they're kind of coming together, but still doing their best, which I have faith in our elected officials to argue as best as they can. They're still doing that. I have full faith in our elected officials to do that. So we have that going on. And then the final thing that I want to talk about is that yields are starting to come down a little bit, but not a lot. So yields are starting to come down a little bit again, because I know they went up a little bit recently. So we have that, and if you're selling premium on government bonds, which is what I'm doing right now, which I think it makes a lot of sense to do at this time, you're bored, but you're smiling because of how bored you are, because that's what you want to do. So that's what's lighting up my tape today.
that juicy premium in government bonds going all the way out to like the 3-year or the 10-year, let's say. We're getting 3% out there? Good stuff out there on the premium from a vol perspective. We'll talk about that more, of course, on TWIFO. I got some guests I think probably going to want to talk a little bit of rates vol out there. Mr. Uncle Mike, or I should say Mr. Rock Lobster. Same question for you, sir. What is lighting up your tape on this? Yet another interesting week during pandemic season, sir.
What is lighting up my tape? Well, I think today you could say is a pretty solid, like, I think the market is taking their money and betting it on the future and basically kicking everything in the past to the curb. I think that's what today feels like. Look at oil. Look at XLE. Okay, XLE. I just full disclosure. I have a position in this. I buy right this thing and last I don't know, a couple months or something. Ever since it got into the low 30s, and yields 5%. Nobody wants it. Basically, nobody wants it. You look at banks, nobody wants them. Anything old school, nobody wants them. Anything related to anything old school, nobody wants it. So it seems like either it's algos driving things or like overnight, they see a lot of anti-oil drilling and stuff like that, and a lot of positive Green New Deal. A name to look at is TAN, something I just follow as kind of a bellwether for green stocks. It's an ETF that just owns a bunch of stuff. Obviously the biggest holding now is Tesla. A lot of these things have just gone to the moon because Tesla's gone to the moon. So you have an old economy kind of chugging along, and you have the old economy is kind of sputtering. I guess the unemployment maybe picture today. But Tesla not traded over 2,000 today. And I think this year it traded $300. I'm pretty sure. And everybody was $300. It was too expensive. So I don't know what is going on. But, it's like anything that's not a stock I'm interested in getting away from. But I think every green fund that's been formed in the last 6 months probably has to own it. And, and if everybody has to pile into something, that's what the deal is. So, and also you can look at First Solar and some other things like that are really taken off. But basically, oil is a fire sale. Pricing wise, it'll never get above $40 again, or it's going to be 40 for forever. Historically, that hasn't really happened. But we don't know because we don't know how this election is going to settle out. There's a lot of talk about, different things and getting rid of shareholder capitalism and stuff like that. So you don't know. I think so. Old economy looks good or looks bad. I'm sorry. Although it's damn cheap if you're a value trader. But all the new stuff like, Apple is a 35 times multiple now. Facebook actually almost looks reasonable at a 30 something multiple. All the big tech is just streaming along. NVDA, had a gangbuster quarter, but for a chip making company, it's still 100 times earning stock now. So it definitely has the growth, but they have attached pretty huge premiums to all of this stuff, at least in the short term. I don't know how long it's going to last. It could last for a year, 2 years. It could last for a month. I don't know. But as of right now, there's a ton of value in the S&P 500, and there's a lot of really expensive stuff. And I think that's part of sort of the machinations of, why we still have VIX in the 20s and, of course, the election. So like any other time, it's an interesting time. I'm trying to remember the last time we traded in zone 4 at an all-time high. Actually, Volmat has to tweet something out to Russell Rhodes. I don't think we have been within a half a percentage point of all-time highs, and VIX has been in zone 4 before. I don't recall that ever happening ever in history. So, hey, we're at a historic moment. What the heck? As far as the vol products go, I think a lot of the movement is going to be muted because the future premium is so high. So it's going to be, they can move certainly, right? And, we could have bad market news or something like that. All that stuff could happen. But like right now, just in general, future premium was so expensive, at least at the beginning of the week and the end of last couple of weeks. It's hard for the vol products to really like get a gangbuster move going unless something drastically happens in S&P 500. So I think we have a lot of, I hate to say it, but we're at all-time highs, and it's sort of like, let's hurry up and wait and see. That's what it feels like.
Let's hurry up and look at this crazy Tesla chart. I pulled it up while you were talking, Mr. Rock Lobster. Guess what the 52-week low is in your favorite electric automaker, sir?
I'm going to pull a number out of my left ear and say 355.
Wow. You're over almost $150 high. 211. It hit 211.
Oh, my God.
So it's effectively a 10X we've seen out there. Yeah, that's pretty impressive. That was almost like exactly a year ago, too. That was about, looks like, around August of last year. So, yeah, what a what a run this thing has been on. And you say that for the rest of the market since March as well. Just insanity abounds everywhere as we move on out. Let's see how much insanity is infecting the markets today, listeners. Let's start before we get to the Teslas and everything else. Let's start on the big indexes you guys like to watch. Let's go small cap first. Small cap Russell, IWM at about 210,000 contracts. The ADV, 470 out there. So all the ADVs coming in a little bit these days. The Qs, 532,000 contracts on the tape as of a few minutes ago. The ADV, just a tick under 1 million, 995,000. The S, just at about exactly 500,000 contracts. The ADV, 884,000 out there right now, listeners. So, how the mighty have fallen in S-land. The SPY closing in on 2 million contracts at about 1.85 as of a few minutes ago. The ADV, 3.5 million. So that was north of 5 not too long ago as well. So all these ADVs coming in. It's that time of year. You do expect that in the August timeframe. But again, this is not a normal August. This is not your granddaddy's August out here. And VIX, as of a few minutes ago, 228,000 contracts on the tape. That sounds light, but that's actually pretty decent paper because the ADV is only about 317. So perhaps VIX will bump up its ADV today. Let's see what names don't have any problems bumping up their ADV today. It cost you 185,000 contracts to break into the top 10 most actives today, listeners. That gets you all the way to our friends across the street, to Boeing. 185K for them. Number 9, AMD, 201,000. So number 9, we're already over 200K. So that's pretty interesting. Number 8, Uber. Back in the top 10 again, 219,000 contracts. Then we jump up again, number 7, Baba, 274,000 contracts for them. Number 5, Intel, number 6, Intel, my old stomping grounds there, 297,000 contracts. Number 5, the symbol friend of Boeing, Bank of America, 301. So we're already at number 5, we're already at 300K out there. 302 for Facebook, so a few stalwarts here in the top 10 still. Number 3, NVIDIA, back in the top 10 this week. 340,000 contracts. Numero dos, the fruit company. Apple, 553,000 contracts. That means you can probably guess what number 1 is. We were just talking about it. Spoiler, Tesla, 637,000. That's all impressive paper, but it's pretty light for them compared to what they've been putting up of late. Let's see really quickly where the biases are lurking in our paper today. It looks like Intel, 83% of that paper on the call side, and Facebook, hot and heavy behind it at 79%. Not a lot of put biases in our top 10. Hardly ever, really. It's an interesting trend. When there's tons of paper, it's almost always calls. That's just the way people think. That's the way the market tends to work. Very rarely, unless you got some weird biotech or something else like that, do you see put biased paper making it into the top 10 most actives here. On the earnings front, that's been driving a lot of these most actives, of course. Been another active week. Monday, we had JD.com. Talked about them earlier in the week on the show. Tuesday, we had some big retailers, Walmart, Home Depot, and Kohl's. Wednesday, more big retailers, Lowe's, Target, and NVIDIA popping off there as well. Thursday, we had Alibaba, Estee Lauder, and BJ's coming off. And then John Deere and Foot Locker tomorrow. And we actually have some move results reports for some of these names, which is nice. Of course, you can find these. These are hot off the presses. You can get them for yourselves at theoptionsinsider.com. Baba was before the bell today because they were going into their earnings at $260.59. They were pricing in nearly 5%, about 4.7%. And so far, at least in the immediate blush of this report, which is, of course, kind of a snapshot, listeners. It's not an intraday breakdown because you have to cut it off somewhere. It had moved a little bit less than 2%, about 1.8%. And right now it's even less than that, 1.6%. It's at 256.5. So Yet another underwhelming performance from an earnings vol perspective here. NVIDIA was always a stalwart out there. It was always a name you could count on to really drive some vol, drive some action out, particularly in the go-go crypto times, which seems like it's coming again. Crypto bulls are out in force again, but NVIDIA was very much a bellwether for that space. They had their earnings yesterday after the bell. They went into their announcement, 485.5. They were pricing in 6.2%. So a fair amount of juice in that straddle. And they delivered, 1.5% as of the time of that report. And actually, looking at it right now, it's even worse. It's only up 0.5%. So, yeah, not a ton here, listeners, in terms of earnings vol. This is kind of reflecting what Matt from ORATS was saying on our Advisors Options show last week, that it's been pretty much a bloodbath for premium buyers this season. So far, that trend is continuing. Let me see if I can find any others really quickly that are kind of intriguing. Let's look ahead to next week really quickly. We've got some other big names popping off. We've got Best Buy here. I'm sorry, let's go to Intuit. For Intuit, they are on the 25th. Let's see, they were at 310.5, so pretty rich for Intuit out here. They were pricing in $14.63. In the past, they moved $8.40. So if past is prologue this cycle, listeners, that's not going to work out too well for them. Let's see some other names we've got on here. Dell $59.85. They're pricing in $4.07. In the past, they've moved $1.69. They're popping off on the 27th there next week. Let's see what else we've got here. Dick's Sporting Goods going to the big box sporting retail. They're on the 26th next week. 46.5 is where their stock was as of this report. They were pricing in $3.36. In the past, they moved about $4. So not a huge gulf there between the straddle and the prior moves, which I guess, given this cycle, maybe not the worst thing out there. Let's see, what else do we have here? Let's see. Good old Hewlett-Packard. I've talked about them in a while. 18.14 after the time of this report. They're popping off on the 27th as well. $1.27 is what they were pricing in. The past, they moved exactly $1. So not a lot of juice there, but again, probably a good thing given what we've seen this cycle. You can also see the breakdown for the full season over there at theoptionsinsider.com as well. Listeners, that's all free as well. Looking at it here, listeners, it's pretty much a bunch of red so far. Red indicating that net the earnings have underperformed from a vol perspective. If it was green, it would be they have outperformed their straddles. So far, pretty much every week here, it's been red, with some of the early weeks really the worst. Like week 1 was at a 63% of performance compared to what they priced in. Actually, I take that back. Week 2 was 55%, listeners. So, yeah, this is pretty much a blood red season for premium buyers out here. Again, surprising. You know, these are unprecedented times. You might expect a little bit of vol to creep in there every now and then. But so far, for the last 2 seasons, it has been exactly the opposite. Names could come out and say almost anything, it seems like these days, including we have no idea. Throw our hands up in the air, take away all guidance, and we're seeing pretty much an underperformance from an earnings vol perspective, which is kind of weird. Let's see what else is weird, because it is time to go in to the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, where we get weird, we get wild, we get whimsical sometimes on every other W adjective you can think of. Before we get to our big names that our Eye of Sauron found today, we got a guest suggestion here, a listener to the network and a frequent guest on Vol Views and others, Mr. Dave Lincoln, a.k.a. the guy with the best Twitter icon out there, the Benny Hill photo. Gotta love that. A.k.a. Famous Dave. He was chiming in, Mr. Rocklops. I know he's a buddy of yours as well. And he said he wanted us to look for option block at this SPX risk reversal that he noticed going up today. I said kind of a light day overall volume-wise in the S. So I guess an 1800 lot's one of the bigger prints to go up out there today. It was the 2800, 3500 risk reversal going up in December. Customer buys 1800 of the DEES, 2800 puts for 57.80, selling 1,000, so doing it on a ratio as well, which is also kind of interesting. of the DEES 3500 calls for 96.60 here. So a couple of things here, Mr. Rock Lobster. First off, this is obviously, if you're buying the put, selling the call, this is a bearish risk reversal, aka most of you folks out there call it a collar, because usually you have it done against some sort of underlying position out here. So it seems like Mr. Rock Lobster, somebody may be a little bit more spooked to the downside right now, aka buying almost 2-to-1 puts over calls, also willing to dump their upside at 3,500. I can't say I really blame them. This is an interesting play. What do you think here of this effectively a collar here? Because they have to have something in the S against this probably. This pretty much 2-to-1 put heavy collar here in the S, sir.
Yeah, I was looking at it. I'm just trying to figure out the. This is a December cycle, right? DEES 18. I'm just looking at.
That's what your buddy Mr. Dave says.
That's what he's saying, huh? I'm just trying to figure out. I mean, it looks like one, but I'm still like a little. I'm just looking at all the time and sales here for December. I see 2,800 puts going up, like through the offer, and then I'm seeing, and then they sold the March 3,500s. I believe, is that the other side of that trade?
Dave said DEES. I haven't had a chance to pull it up myself. I'm going solely off Mr. Lincoln's suggestion, which could be a dubious way to go.
Well, you know, he is Benny Hill. I'm just saying. Like, so when he's meaning right, he could mean left. Or if he's meaning up, he could mean down, because it is Benny Hill. But, okay, I do see some December now. And okay, so I see the calls, and I'm seeing the puts. So, well, it traded through. So, of course, you never know where they trade the future against this. You know, probably. Yeah, well, it's a straight up 3,500 call. And yeah, the only thing I could say is from the screen quote pricing wise, definitely it looks selling calls, buying the puts. 90, and they're looking for a pretty fair credit on this thing now, because they're sold half as many calls as puts, like you said before, which kind of suggests they like the idea, but they don't want to be maybe they have a delta on it, so you have maybe possibly like a little delta neutral action where you sell the calls to pay for the puts. They could have underlying on underneath it. But either it's one is, you know, I guess the simple answer is anytime you sell the 3,500 call, you're not expecting a whole much of a move above 3,500. That's, I think, the first observation. So I don't see how this is what I would call a bullish trade by any stretch. Even if they hedge it, or they use it as a some sort of delta neutral back spread on the downside, they're really looking for downside. So it looks kind of bearish as a piece of paper, but at worst they're getting out at a pretty good price, depending on maybe they have some SPY against it, or you know if they're buying December futures or something. But it's either way, I can't see how you can make a bullish case for this trade.
Does not seem to be that either the ratio or the fact that you're collaring at all. When you're taking the step to collar at all, listeners, that's usually a bit of a bearish sign as well. Our old buddy, the Viceroy, used to argue, if you're going to collar, you don't really want to sell the call, so just get out. That used to be his argument on that front. But interesting stuff there, Mr. Benny Hill, a.k.a. Mr. Lincoln. Thanks for watching the S for us. Let's see what else we got. Another S-related name here from our Eye of Sauron today. Going out to SABR Corp. Talked about this name in a long time. Ticker symbol, of course, SABR, listeners. This is the largest global distribution system provider for air bookings in North America. Now, this was actually, of course, founded by American Airlines back in the 60s and spun off in 2000. This is the name that's trading right now, $6.86. Off a whopping 16 cents, or about 2.25%. This is the name that's had an interesting year as well. A year ago, they were trading a wee bit north of where they are right now, to the tune of about 23 and change, 23.16 or so. And they kind of hovered at that level, pretty steady, pretty firm, until, you know what happened, listeners. The big madness hit in mid-February. On February 17th, it was 21.82, 52 by the 24th. A week later, it was 1361. And get on out to, March 16th or so, it was trading 686. I think it got as low as about $3 and change, it seems like at one point here. I'm not trying to find the actual 52-week low here on this chart. For some reason, it's not playing with me. But either way, it was pretty freaking low, I think is the technical term. And then it kind of hovered there for a little bit and then kind of slowly started its rebound, listeners. It peaked out back in, not on June 8th this time, but on June 1st at $10.36 recently. Then it kind of has sold off pretty much ever since again, getting back to where we are right now, kind of marking another trend we've seen with a lot of names that are outside of the big FANG tech names that have pretty much gone up nonstop ever since the middle of March. There's a lot of other names that fall outside that category. Still big, still liquid, but not quite a, trillion-dollar corporation out here, and they have had struggles over the last couple of months, certainly since early June 8th for a lot of those names, but in this case, this name, June 1st, and has kind of struggled to make that 7 handle, and again, we're shy of it again today. So an interesting tale of a couple of different tapes here over the course of the past year in SABR. Worth noting they had earnings a couple of weeks ago back on the 7th, so today's paper, not exactly an earnings play out here, but someone out here is pretty active in SABR today, listeners. The first trade that lit up our Eye of Sauron today was a 10,000 lot of the SEP 8 puts going up for $1.15 right on the bid. They were $1.15 at $1.35. But they didn't stop there. We also saw the 7 puts going up. Let's see time-wise. These were a little bit later. It was about an hour and a half later or so. The SEP 7 puts going up for 50 cents, 9,000 times, 9,137 to be precise. On the bid as well, they were 50 cents at 55. They went up about almost 10,000 times at that 50-cent bid. Also saw, in between those two, pretty much, the SEP 8 puts going up again 9,000 times for $1.10 this time. So they had crushed that bid at $1.15. They hit it again for $1.10, another 9,000 times. Also worth noting, even the Jan 7.5 puts going up for $1.60 right off the bid. Those were in between those other ones as well for about 2,300 times. The total so far coming into the show today, listeners, the 8 puts in September had traded about 20,500 times, and the SEP 7 puts had traded nearly 12,000 times, and about 2,600 of the Jan 7.5 puts out here as well. So, of course, there are earnings between now and the Jan puts, not so much between SEP. The next earnings cycle out here is October 29th, so not an earnings play, but it seems like, Mr. Rock Lobster, it seems like a bit of an interesting and sizable and split line in the sand out here in good old SABR Doggy. First off, the 8 puts, these are fairly in the money right now, over $1 in the money. So we're seeing how many total? 20,000 and change have gone up on the day of these in the money puts, which alone is kind of strange, kind of raises the hairs on the back of your neck, makes you stroke your chin and say, Followed up with these also in the money puts, but a little bit less now, the 7 puts, also in the money puts, and then the Jan puts also in the money as well. So kind of weird stuff across the board. Someone maybe wants to just scoop themselves up a fair amount of SABR and is deciding to go the short put route to do it, because if you're selling in the money puts, guess what, listeners? You're probably going to end up owning some stock, so hopefully you like it. A weird one, but maybe also someone feels this thing has kind of been beat up and maybe thinks it can at least retrace back to those highs of 10 and change it hit back in early June. If that's the case, an interesting approach to this. Mr. Rock Lobster, what are your thoughts here on size in the money puts going up in SABR, sir?
This is a very curious one. Of course, it's related to the airline industry. So anything related to the airline industry is just absolute dog food right now. Maybe 3 years from now, we'll say, we were idiots and this guy was brilliant for not, doing anything with these puts. But I think sometimes we look at some of this paper and we go, this kind of feels like a tempest in a teapot type of paper, like what are really you trying to do? Not a total lock to parse what's going on. So vol is down big in here. And what do we got? We have a little earnings coming here. Again, kind of I would say we don't have, we just had them, right? So, Yeah, so August. So we haven't had. So basically, this company has been slammed by the coronavirus, and it appears that somebody is just going. I mean, the only thing I could really say here, Mark, it feels like they're just trying to go yard into this thing, just selling. Yeah, I'm looking at the pricing. Everything looks sort of on the bid, right? I'm not.
Pretty much. They weren't very nuanced about it. They just took it all out.
Yeah, they're just smoking the crap out of it. And like in a September position, airlines aren't recovering by September. Okay, they'll be lucky to recover maybe by next September. So I think this is just somebody's making a bet. They just want to own it. They'll take the premium they can get for it in the meantime and just crush it. Crush the primo and take delivery. So I'm looking at 31,000 contracts. So that's 3 million shares. So it's not a small amount of money by any stretch of the imagination. But I think it is a way to generate a couple extra bucks and take delivery in the meantime. You know what it is? I think this is like, you could almost say this is a variation of the TOSAW wheel trade. Maybe they read his book. They're like, screw it. We're just going to sell 30,000 puts. We're going to take delivery. We're going to get the juice in the meantime. And I'm going to get the stock for a cheaper price than if I just went into the open market and bought it. And I think another reason, you sell puts because you don't think a stock is going up, right? You don't think it's going to go to zero, but you don't think it's going up either, right? You kind of want to take delivery and you're kind of soft pedaling your way into the equity, which I've been doing for 2 months, and it has not worked very well. I got a lot of stock in a lot of old economy names that is just, I'm not making any money. Some rights are helping, but it's definitely hasn't been like I just could have closed my eyes and bought, a couple hundred shares of Apple and done better, I think. So, but it's a long-term game, and I think that's what this person's playing. They're playing the long-term game. They're going to take the juice in the meantime, and maybe in a couple of years, if SABR's trading $30 again, they're going to look pretty smart.
We're going to put this one in our to-be watch as well. We'll come back sooner than 30 years, but we'll come back before these bad boys expire and see how our friend fared and what he was likely up to out here. We haven't mentioned Uncle Mike's book in a while. I forgot about that. Go long. Check out Uncle Mike TOSAW's book there on your favorite device reader of choice, maybe a Kindle store or others, or get the hard copy. Let the man stay in his champagne wishes and caviar dreams out there. Buy the hard copy. Give him some actual royalties out here. As we move on into our final name, this is kind of some old school odd block paper, Mr. Rock Lobster. Straight up upside call love coming here in Oracle. Oracle trading right now 55.5 off about 2/3 of a point or so, or a little over 1%. This is the name that's had an interesting year, actually. A year ago, it's pretty much almost exactly where it is right now. It's $53 a year ago. It kind of stayed at this level, 53 to 55, for the better part of the beginning of the year until all the madness hit. Then it hit a low of 39.75 or so back in the madness of March. And then it kind of rebounded right again by, by early April, about a month later, about mid-April actually. It was at 54 and change again. So it kind of regained everything, and it's been kind of hovering right around here ever since. It got up to 57 and change about a little over a month ago. And then it kind of came off that high a little bit. But other than that, it hasn't really done a lot. Of course, Oracle's been the headlines of late as one of the potential suitors here for TikTok. The early lead in that was going to be Microsoft, but it seems like Oracle kind of elbowing their way in there right now. It seems like Trump actually maybe giving a little bit of his seal of approval to that deal. So maybe that's what's driving what our Eye of Sauron found out here today. It was nearly 3,000 of the SEP 60 calls. Let's see, these are expiring on the 4th, so these are the weeklies. So very near term and near upside as well, going up for 11 cents through the offer. This guy couldn't even get 3,000 done at the 10-cent offer. There were 2 offered there, Mr. Rockcloster. So he took out the 2 lot, and he got the other 2,840 for 11 cents out here. There are earnings in Oracle's near future, but not in this cycle. They are on the 10th, so a week later. So this guy didn't even bother getting himself any earnings juice, probably didn't want to pay for it. He just said, I'm taking a quick swing at the bat here that Oracle's going to break out of this range it's been in for the better part of the year outside of the March Madness, hovering in this mid-50s range, and it's going to pop in the next few weeks based on this TikTok madness. Mr. Rock Lobster, is that your takeaway as well? And what are your thoughts on these little bit of the old upside swing for the fences here in Oracle, sir? Kind of old school odd block paper coming back.
This does feel like old school odd block paper, doesn't it? Like not the like when was the last time Oracle moved 10%?
Yeah, it's not exactly known for these big chart breaking moves.
Yeah. I don't see that happening anytime soon, to be honest. But it could happen. Like Oracle buys TikTok. What is that going to do? Is that going to even move a decimal on their revenue? Like I don't even see how that makes any difference at all. But it's probably the only tech stock that hasn't gone to the moon. Although it's like old school tech stock. You know, they sell software and databases and stuff like that, I guess. But it's kind of snuck its way up into the mid 50s. So I just view this trade as just a huge. I would just call it as a huge gamble. However, you pay 11 cents and it currently is trading 19. So I guess, like, what do we know?
What do we know indeed here?
Almost double.
This guy's laughing all the way to the bank.
Yeah, like 3 weeks, 11 delta put, doubled in price. Okay. So you know what? If it's tech, if it rhymes with tech, if it has anything to do with tech, just buy calls. And of course, that'll get tweeted out, and then I'll be pillared forever.
Yes.
But apparently,
I will have our producers tweet that out forthwith for you. Make sure to quote you so everyone knows
exactly
who to attribute that to.
You know what? That's the market's going up, and that's what it likes. So anyway, there you go. There's nothing else I can say about that.
It is very reminiscent of pretty much every conversation I had with anyone who was buying stocks on the floor of the SIBO back in the early .com days, and it was, what does it do? Oh, who cares? It's tech. There is a little bit of a shade of that spilling over into the marketplace today. We're going to come back to these as well. We're going to keep an eye on these Oracle bad boys, because you're right, it is a bit of a weird one. Oracle, kind of a sleepy, staid name. They make their money and make a lot of money, but not exactly the sexiest of name to the end user, the end consumer. If you're not in the enterprise side, you don't really deal with them too often. So interesting to see them diving into this more consumer-oriented play with TikTok. Keep an eye on that one. Now it's time to keep an eye on what you guys have in store for us. It is time for the Thursday Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block portion of the show. You guys take the reins, your Q's, our A's. Let's kick it off actually paying off our poll from our last episode. We asked you guys kind of a bit of a later mid-year check-in on your vol prognostications, your vol thoughts for the end of the year. Obviously, that vol surface, how much juice they're pricing in there throughout the year into January is a big topic of conversation, not just on this show, but on vol views and everything else. And we want to get your gauge on it, your sentiment. You think how much vol they're pricing in, is it warranted or not? So we gave you 4 choices. Say, where do you think VIX and spikes are going to be at the end of the year? 4 ranges. Obviously, it's a Twitter poll. You can't get too granular with them. I have to give you a bit of a wide range. But we said around here, which was at the time of where we wrote it, was where it was, 18 to 25, still in that range. We're seeing, we gave you higher, 25 to 35, lower, shy of 18, and much higher, north of 35. I believe on our last show, both you, Mr. Rock Lobster, and Uncle Mike both went on the lower category. And spoiler alert, you did not win. Our audience, always a bit of a deeply cynical bunch when it comes to overall valuation, and a bit of a bullish bunch when it comes to vol. We're feeling a little bit higher. Not super high, but higher. They were in the 25 to 35 range with about 32%. So not a clear, overwhelming majority of people picking that. But if you add in the much higher category, which is over 35, which was our number 2, at 23.6%, now you're talking about 55%. So now you're talking a clear majority of the folks out there saying it's going to be at least north of 25 by the end of the year. And then you got a tie for third place with the around here 18 to 25 level at 22.2%, and lower, south of 18, also at 22.2%. So, interesting dichotomy in our audience, but a slight majority, but a majority nonetheless, saying north of 25 by the end of the year, and a good chunk of you saying north of 35, which sounds outlandish, but we were over that not too long ago, listeners. So, interesting things out there. Let's go around the horn here. Let's go out to the App Store. You guys are giving us some love out there as well. 5-star review came from Windy City. I like the handle. He says, the best financial app in the Windy City was the subject of his review. He says, good app with awesome segments and participants for options users of any level. Well, thank you for that there, Windy City. I wonder where you're hailing from. Good town out there. If you want to leave us a review, if you like what you hear, not just for this show, but for the entire network, or maybe an individual show that you like, you know where to do. You can go off to your Apple Podcast Store, Stitcher, Spotify, or in the case of this gentleman, they liked our app, and they like to use it to get all of our shows, and they left the review there. A lot of you doing that as well, or in the Google Play Store. It's even on the Amazon Kindle Fire Store, if you want to get it over there, our app. I don't mention the app too often, but it's a great place to have all of our content in one place. If you want to just mainline it, or if you're looking for a particular episode that you can't find on, let's say, an iTunes, because the show's been running for a while, then the app is probably the best place to go out there. All right, let's see. Oh, our buddy and your nemesis, Mr. Rock Lobster, chiming in on the live chat. If I can, there we go. Dave Lincoln, he's listening live. He disagrees with you wholeheartedly. He says, get that Rock Lobster guy off the show, Andrew. But he also says he loves me some option block. So we have to say to that. Your buddy, Mr. Lincoln, throwing you under the bus, sir.
He disagree with my analysis of the collar?
I'm just teasing. I may have added a word or two to what he said. He just said loves me some option block. He was just full of love. I was just giving you some umbrage just for old time's sake.
Well, you know what? That's what makes the market. You can disagree with me. That's why you have a pit with guys sold the juice on one side, bought the juice on the other. That's the way it went. That's what.
Yes, that is the case. All right, let's see. Next up, we've got S Research Group. We've been talking a lot on this show and others about what's been going on with Robinhood, the outages, of course, the tragic story they had over there. And, of course, the recent story a lot of people ran with about how they did more trades than most of their brokerage competitors combined over the last quarter, which I think took some people by surprise. This guy was chiming in, or this group, I should say, this S Research Group chimed in on that latter story about the good volume over there, Robinhood, saying, yet we had to sue to get our capital back, which took almost 6 months, which negated all the, quote, free trades. When the market crashes, they're all screwed. Screwed's in caps. They can't even get the basics right, and now that legit brokers are now free, the non-gamblers should be transferring anywhere else. So it sounds like this guy or this group here did not have a good experience with Robinhood, to put it mildly. If you have to sue your broker, that's unfortunately not a good experience. Well, sorry to hear that. S Research out there. Yeah, it's usually not the go-to choice for the hardcore traders, let alone the groups, to go to Robinhood. But as you mentioned now, particularly that a lot of the major brokerage platforms have aped some of that pricing and are also bringing a lot of technology and, of course, customer service and education and platform to the table. It's kind of harder to argue in favor of a ultra low-cost provider like a Robinhood, and it sounds like your experience was unfortunately not a good one. All right, let's keep moving here. Scott Somer, frequent commenter and listener here of all of our shows, chimes. He likes to listen to them on YouTube. It seems a lot of you like YouTube these days, so keep it up if you're out there on YouTube. He chimed in actually on our interview we had recently with the Small Exchange. He said, nice to hear some of the Small Exchange people on the Options Insider Radio Network. Well, glad you enjoyed that one there, Scott. He also hit the passes along to the meatball, Mr. Rock Lobster. He also is extremely concerned about the meatball moving to Austin. He has sent us a legion of weather alerts about Austin, about the Hurricane Center, a hurricane potentially hitting Texas, all these other things. So you got to tell Mark that our listeners here are very concerned he's moving to a dangerous part of the world, Mr. Rock Lobster.
I agree. I don't know how a meatball is going to survive in Texas. I have to be honest with you. Without Chicago and without the Cubs and the whole, I'm afraid he might really suffer from withdrawals. That's my biggest worry.
guess you have to just make it up for it in large amounts of brisket, which is good for your health at the end of the day. All right, let's keep on rolling, see how many more of you guys we can squeeze in here. Nelly's got an old school question. He wants to know, does implied vol level really matter when you're just writing covered calls? Uncle Mike, you do a lot of covered call writing on behalf of your clients out there. Are you watching the implied vol levels all the time when you're writing covered calls? Or are you just throwing caution to the wind, sir, and saying, I'm going in, it's 12 cents, I want to make that 12 cents mine, sir?
Yes and no. I typically don't look at implied vol levels. I look to see if it's a stock that we like. And usually George and Chris pick out the stocks. And usually we want to make roughly about 1% a month when doing a covered call, a little bit out of the money. So that's what we look for. Just kind of keeps things a little bit simpler in that we don't necessarily need to scan for volatility levels. But there are some stocks that they pick that I'm like, well, it's pointless to sell that 12 cents on this $48 stock right now. And then we just look for the next one. So yes and no. The concept, yes, but the actual specific implied vol, typically don't look at it. Just look into the numbers and trying to keep it simple.
Uncle Mike says, give me that 12 cents, baby. I want all of that 12 cents in my hot little hands. Mr. Rock Lobster, your folks out there in your trading legion, are they keeping an eye on their implied vol levels when they're hammering out covered calls, sir?
Actually, Trading Legion is kind of an option buying, learning how to buy option strategy group.
Don't tell Don Schlesinger. He will just excommunicate you.
I know. Like he says, the options are meant to be sold or not, right?
So you focus on the latter portion of that, not selling.
So you're only buying options when you think you got a shot. The only thing I would say, implied vol matters because sometimes if the calls are too cheap relative, like why bother selling them? You give away too much upside to sell a call. So like TOSAW says 1%, that's certainly a good number per month. You got to make some money on them because you give away upside by selling calls. So that's what I would tell a person is the IV matters because you want to make some juice selling them. If it's not there, it's not worth it. Just let the stock go up and then sell the call, something like that. But I think you need money when you're selling calls.
Well, you do need money, and it is a good thing. We have got a lot of these questions in this vein of late. Do the Greeks matter? How important are they when I'm out there trading? And, hard to argue on behalf of the ignorance of not knowing something when you're out there trading, because at the very least we talked about a basic thing you could do, like volatility cones, so you can go out and look at what the vol is and see how that compares historically to what you're doing. If you're selling a vol that's, let's say, 2 standard deviations below the mean out there, maybe you want to not sell that call. Of course, a lot of that's all going to be baked into the premium as well. You'll know if you're getting 3 cents for a call that it probably isn't super juicy. You don't want to sell it either. But still, it's a good thing to know the relative levels of what you're out there trading so you can at least compare it to historical norms and have some sort of frame of reference for what you're doing out there, not just blasting away month after month, week after week, regardless of what is going on out there. And a good question out there. Who was that? Nelly. Now we have to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's see. Let's hit on a couple really quickly that are popping off again. Coming up next week from the earnings front, we're going to have Dell on the 27th. We've got Hewlett-Packard also on the 27th. Got Dick's Sporting Goods on the 26th. Intuit on the 25th next week, and a lot of interesting stuff out here. Best Buy out there next week as well on the 25th. So a lot to unpack, a lot to keep an eye on if you want to focus on something a little bit more bite-sized, a little bit more micro, a little bit of a single name as opposed to the madness, the vagaries of the macro world. If they're driving you mad, say, I don't want to pay attention to this nonsense. I want to focus on an individual name. Still a lot of big names for you to sink your teeth into. Of course, you can get the reports for all of those over there at theoptionsinsider.com. Let's go back around the horn. Uncle Mike, we'll start with you, sir. What are you watching for the rest of this week until the weekend, sir?
I would say politics, all-time highs in the market, and medicine. I thought I was going to come up with like a good snappy one, like the Warren Zevon song, Lawyers, Guns, and Money, but all I can come up with is politics, all-time highs, and sicknesses.
Politics, all-time highs, and maybe we truncate that a little bit. Politics, stocks, and and disease. Something along those lines. We'll workshop it, Uncle Mike. How's that sound?
Something similar to Lawyers, Guns, and Money, that's for sure.
Yeah, we'll truncate it. We'll workshop it. We'll get it back to a fighting shape on the next episode. Mr. Rock Lobster, same thing for you. Do you have a pithy 3-word synopsis for what you're watching as well, sir?
What is well, instead of sickness, he could just say Rona. The Rona. Rona, politics, and money. I don't know, something like that. Let's just see. Hey, how high can tech go? Right? We have a Tesla split in another week, right? We still have another week to go before it goes distribution. I think Apple distribution at the end of August as well. So Apple's $31 away from $500. What the heck? I believe 2 weeks ago, Tesla was $1,500 and now it's $2,000. So, I think, hey, what the heck? Anything can happen. So, old economy still looks kind of dead. It feels like you'll have a buying opportunity for almost forever. I would like to see VIX move. I would like to see it move south, but I don't think it's going to. I think a lot of what you're seeing now is what you're going to see next week, unless something drastically different happens.
I wonder how much the 2000 call was trading for a year ago when the stock was 211. Might be a good little homework assignment to do out here. See how much you could have scooped up that bad boy for. Oh, the fortunes left on the table. Unfortunately, that music means we have to leave the rest of the show on the table. But before we go, let's go back around the horn. Mr. Uncle Mike, we'll start with you. If folks are intrigued, they're excited, they want to learn more, maybe they want to just have you hold their hand through these crazy markets, where should they go? What should they do, sir?
Go to stcharleswealth.com if you'd like to work with an advisor who isn't afraid of options. That is me.
He ain't afraid of no options. Listeners, give him a call over there, or just check out the website, stcharleswealth.com. Mr. Rock Lobster, are you similarly unafraid of options? And if so, where should folks go to reach out to you, sir?
Go to optionpit.com. Look for us at the Trading Legion. Any of our products that'll help you trade options better, come on over. Optionpit.com.
Come on over, optionpit.com. Only if you want to buy options. That's the Legion. The other parts, the pit chat and everything else, will teach you how to sell those bad boys. Optionpit.com is the place to go. And, of course, don't go anywhere if you're listening live. We'll be back in exactly half an hour to talk all the things lighting it up on the futures option side of the fence. We're going to talk some equity vol. Spoiler alert, probably like that. You're going to get in probably some energy, maybe some rates, maybe some FX. You never know what's going to make it. I have to go run the reports right now and see. That's what makes that show so fun. We'll have some great guests joining us and a whole lot more. If you're listening live, we'll pump some fun stuff into the chat in between. Some fun shows. We'll be back again in 30 minutes. Otherwise, we'll be back again tomorrow. Volatility Views, 1 p.m. Central, 2 p.m. Eastern. Then it all kicks off again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.